Hello, it's Ken here from smartforexeducation.com. Just wanted to give you a very quick overview of regarding what has occurred in the markets, especially the gold market over the last week or so. We've seen a lot of major news that has come out in the US and also in the Eurozone, and it's good to clearly see how gold is actually responding to all of the the ongoing streaming news that's literally coming out on a continual basis. So basically what I've literally done is, what you can see here is, since if we actually zoom out a little bit here, you can clearly see this is a daily chart. I'm going to move to a monthly chart. You can clearly see that the market has clearly shown a strong trend to the upside, supported by higher lows in price. But we've now seen a topping effect that occurred towards the end of last year, September 2011, and where it's topped out, and all the market has been doing on a monthly basis from February, it's just been literally making lower highs. It's pretty clear to see. Now, if you move to a daily chart, all I've basically done is drawn a trend line from highs of March 2012 and lower highs. And also what I've done from the lows from May 15th, I've drawn some higher lows. So you can clearly see that the market has been making lower highs. Also, you can see here that the market's been trying to make higher lows. But the range, what's so prominent about this is that the range has decreased substantially. So what I'm saying here is that the amount of range is very, very tight now. And this is a type of market which is not an investor's market, it's more of a trader's market, because you can get yourself in situations where all you're trying to do is just looking for shorter term targets and movements, where before you may be looking from 1670 all the way to 1520. So looking at $150 $150 moves. But this is not actually happening right now. So taking that into consideration, you need to understand how to play these types of markets. This is crucial. So what has happened here, if I zoom in, and I'd like to just go onto a smaller time frame to show you exactly what's happened here. We're seeing some significant moves. We had, if I zoom back towards the late June, we actually saw that the Euro summit, they agreed on a referendum fund to help to recapitalize banks, especially Spanish banks, where the money will not go direct to the government. It will actually it will lend to the bank straight away, okay, which can obviously reduce the time lag. So that was a positive effect, not just on gold, but on the major global markets, and that was good. But we saw continue where the spike up for the whole day. There was a slight indecision the following day, and then a continuation to the upside. And then when the market topped out at certain areas. If you then go into a daily time frame here, so we saw a topping effect here where this small spinning top bar occurred. This is on the Independence Day, okay, July the 4th, Independence Day. And so obviously there was light volume. And then we saw following that, we had a lot of news that came out. So we had the ADP, this is on Thursday, we had the Bank of England and the ECB. If I just zoom down here. So basically what we had at, it was about 12, time is it exactly? It was about, if I get this right, it was about 11 o'clock, it was about 12 o'clock GMT time, so 1 o'clock Central European time. We saw that Bank of England came out. They didn't change the rates, but they agreed to put more money into the market, I think about 50 billion, so more quantitative easing there. That pushed the gold higher, because obviously when there's quantitative easing, then it means there's more printing, then there's inflationary fears, then obviously people look to put their money in safe havens like gold, for example. But then we saw a spike. Then following that, we had the ECB that came out. ECB decreased the rates by 25 basis points. It seemed like the market was actually expecting a potential 50 basis point decrease to 0.5, but that didn't occur. So they decreased by 25 basis points to 0.75, and that's the first time in history that the ECB has done that. And what we saw for that is not only with the cut 25 basis points, but we then heard news that there were no signals that they were looking to print any money, and this obviously took the market by surprise of some sort. Then we saw this sell-off, okay, and that continued when we had the ADP report that came out, which was better than expected. Now, if the ADP report comes out and it's better than expected, that means that's more positive for the US market, which means that if that's good for US market, then the Federal Reserve may not be looking for a QE3, quantitative easing, to print money. And that's a negative for gold, okay? That's how gold is reacting right now. It's negative to gold, a sign that they may not be printing money in the foreseeable future. Then we saw a huge sell-off, okay? Then that continued, occurred, which was yesterday, Friday, where we had the non-farm payrolls. Non-farm payrolls came out, wasn't bad, wasn't good, but it shows signs that basically there will not be any QE3 occurring in the near distant future, and we just saw a continual effect in the markets. So taking that into consideration, sorry, just checking the time here. Taking that into consideration, with the sell-off, we saw a continued effect where the market continued to sell. And it was pretty clear if you have a daily time frame, you can see that the market tested this resistance level and there was weakness. There was a lack of strength. So technically, the market found a resistance. That should have given you a heads up that, oh, you have to be aware. On top of the technical structure, fundamentally, there was too much pressure to the downside, and hence the reason why we've just seen a sell-off. So now the heads-up targets for the price will be potentially looking for, if I just draw this in here, potentially looking for the support base where the previous low, where it could potentially bounce, and maybe we see maybe a test lower to the next support. But anyway, be aware, there's a lot of news coming out. We have the earnings, and we have the earnings in the US next week, so just be aware for that. And just keep a lookout for the next blog post. And good luck with trading next week, guys, and speak to you soon. Take care.